This is the Value Investor Podcast with Tracy Reinick. All things value, all the time.
Welcome back, value investors. So the stock market remains volatile, as I know you all know. We've had some really big swings, some new lows, and now we're in the middle of what most are calling a bear market rally, but whether or not it is, I don't know. It's definitely a rally because it's off pretty big, double digits here off those lows. So I know many of you are wondering, is it too late? Did I miss it? Is there anything cheap out there? Because a lot of the big name stocks have really seen big rally moves here now. So I know some value investors, you got to be thinking, oh, darn, I've missed out. But you really haven't, because this is going to be a longer process that plays out over the course of the next couple of weeks. Not to say that this week wasn't the bottom, the ultimate bottom, but we're going to have ups and downs. And just because you might have not jumped in when this big rally was going doesn't mean there's not going to be another big rally and another big pullback and another big rally after that. No one knows, but there's a lot that's still yet to go on over the next couple of weeks. And I've been listening in on the conference calls from companies over the last 2 weeks who have business over in China. And I wanted to know, what are they seeing there? How is the recovery? Obviously, a lot of the businesses are back open over there, but is anyone going? What do the sales look like? And a lot of them have been very honest about what is going on over in China, that they're in the recovery phase. They're not yet back to normal. And it's been a couple of months over there since they went into their lockdown. So it does give us some clues as to what it's going to be like for US and European and basically everywhere else in the world, all the other businesses from India to Latin America and South America who are now shut down, and there's a lot of sheltering in place going on. So that means there's going to be more headlines coming up over the next couple of weeks, and we're going to see more volatility in the overall stock market. So it's not going to be all smooth sailing, and I still want to look for what stocks are on sale, even with this recent rally, because there's still some that are down pretty significant amounts, even off their recent lows. So if you're going to look around for stocks that are on sale, we know all the value areas are still really cheap. Energy, a lot of the retailers, those areas that were cheap before the coronavirus remain cheap today, and some even cheaper. But I wanted to look beyond those stocks in this podcast and look for some true like superstar stocks, or I should say big cap names that we all know that maybe are on sale, some that we might not have been able to get on sale until just a couple weeks ago, and others that might have still been on sale but that are cheaper now than they ever were before. So I didn't really do a screen for this. Well, I kind of tried to, but it's hard to find not necessarily cheap by a PE level or that kind of cheapness versus, just stocks off their 52-week highs. I searched for that, but that's about everybody here that I tried to use the Zacks rank, even though the rank is going to be pretty screwed up going forward here for a couple of maybe even quarters here. But I tried to screen by that, but that didn't really work either. So I got a few stocks off of a random screen I did looking for stocks within 10% of their 52-week low. So that was a little bit helpful. But otherwise, I'm just including a couple others that I know are on a lot of people's wish lists and that I've been tracking. I knew they had sold off. And so we can kind of see where those are now. So let me start with a couple of the stocks that are true values by their actual PE ratios. So these do have low, cheap PEs, and now they're also down significantly off their highs. So these are a couple that showed up in the kind of original screen I did near their 52-week lows. So the first stock is eBay. We haven't talked about them in a while, and they get kind of overlooked. But if you can get them cheap enough, I might be interested in them, even though they're not as big of a growth company as some of their peers. But ticker is eBay, EBAY. PE is just 9 right here, and it does have a PEG ratio of 0.8. So that's a real value indicator there because it's under the 1. It does pay a dividend yielding 2.3%. And year to date, even with the recent rally, still down 18.9%. So still on sale for eBay. The second one is one I've talked about on the podcast not recently, but a while ago, I would say. And a lot of these types of stocks have other issues that investors need to be looking into, not just whether or not it's cheap. But this one is Pfizer, ticker PFE. PE is just 10.6 now. And year to date, down 22.4%. So dividend is yielding 5.1 now. And I know a lot of the drug companies have issues about their pipelines and how they're going to actually grow revenue and all of that. But again, if you can get some of these cheap enough and discounted off of their recent highs, then they start to get interesting. Now, the third stock for this week is one we have talked about in the past. I'm bringing it up again because it's still on sale, and this is in the group of, yes, it's been a value for a while stocks, and it is JP Morgan. JPM is the ticker. PE now is just 8.4, but that's probably going to actually go up because the earnings is going to go down on JP Morgan here. But dividend is now yielding 4.1%. That's among the highest I can recall JP Morgan being since the financial crisis on the dividend yield. Down 33% year to date. So that's a pretty big pullback. As we know, the banks have issues, not to mention the fear that, basically the entire economy is shut down and what their exposure is to that, but also that with the mortgage rates and just the interest rates being so low, they're going to have a hard time making any money here. So keep that in mind. But JP Morgan, pretty cheap here. JPM is the ticker there. And then switching over to just a few other superstar stocks that are off big, but that don't have classic value fundamentals. But that doesn't mean they're not a value based on peers and what they were doing before, essentially, because we're just looking for ones on sale. It's not dirt cheap, but if you liked them before and were lamenting that they were way too expensive, they are cheaper here. So the first one of those is Intuitive Surgical. ISRG is the ticker, and they're down 21% year to date still, even with the massive rally. We've seen this bear market rally on the Recovery Act that they're passing. And PE is down off of its highs, which was above 40, I believe, and now at 32 times. So it is on sale as a growth stock, but not yet into our range of valueness as far as classic value goes. Also, they make the Da Vinci surgical system. When all of this is over or has receded, they will still continue to make this great surgical system, which is being bought by doctors and hospitals all over the world. So I like these types of companies a lot because you are getting it on sale. So that's Intuitive Surgical, ISRG. And on similar vein, seemingly, I must like a lot of the healthcare stocks here because our fifth stock is Edwards Life Sciences, ticker EW. They're down still 16% year to date. They were down more, so maybe we'll get another pullback and another buying opportunity. But these are the heart treatment guys, valve replacement. It's like a tongue twister to me, is what they do. And this has been one of the beast stocks, basically, over the last 2 years. And now you're getting your chance with it being on sale. So the PE is not as bad as Intuitive. It's down to 29 times here, but still a growth stock PE. PEG is at 1.8, so I don't hate that. That's not too high. No dividend with this one, no dividend with Intuitive. So you are just paying for the growth with both of these, but the growth has been there. They're both, at the top of their fields, so to speak, in what they do in healthcare. So I like a lot of those. And obviously some of my screens and then just some of what I follow is showing the healthcare stocks. And there's some others that are also in that group, as I said. So it might behoove value investors to be looking around into some of those areas, not just energy and retail. And just a little tidbit on the retailers. I keep getting asked this a lot on StockTwits or Twitter about the retailers, some of them whose stocks have gone even more into oblivion than they were before. There are some deals there. Not going to lie, there definitely are, but you have to be have precision on where you're buying. So the retailers who were in trouble, who were having declining sales before everything happened with coronavirus, before all their stores were shut down and they have to, pay their employees not to work and whatnot. Before all of that, those are not the stocks you want. You do not want the ones who were already in trouble. They aren't more of a deal because they've gotten even cheaper. They're going to have even more troubles as all of this is unfolding. So buy strength no matter what area you're in and buy the top in that group. So there are some great retailers that are at the top of that group. You know who some of them are right now. Home Depot, ticker HD, Lowe's, LOW, Costco is killing it, COST. Amazon, obviously, is one of them, AMZN. And then you have the other big department slash supermarkets, Walmart, WMT, Target, TGT, although Target is withdrawing some of its guidance. So those are some of the names. You know who some of them are on the specialty side. Apparel is going to be real difficult here in some areas, but not all. On the G3 apparel conference call, they said performance wear was still doing well even as the shutdowns were starting. I guess people want to be working out at home, right? So they're suddenly going to be like, I'm stuck inside. I need some new clothes to do the yoga on YouTube. So they're ordering stuff. But you gotta be a little bit of a sleuth and find those retailers that are killing it. Don't necessarily think, it's gone under $1 now. It's even more on sale. A lot of these, even the strong retailers, are tapping their revolver lines of credit just in case. So keep that in mind as well. A lot of them are getting their liquidity up and ready because it could be real rocky here over the next couple of weeks. And so go for the strength. So I should do a whole podcast just on the retailers. Maybe I will next week. Most of them have now reported, but we're still getting a few of them in here. But as soon as we get them all in, I guess I'll be covering those because they are still cheap. They are still value stocks. So let's recap what we talked about today. No retailers in this group. We had eBay, which is ticker eBay. Well, I guess they're a retailer, right? Well, online marketplace is really what they are. So eBay, Pfizer, PFE, JP Morgan again, but I like any of the big banks here, especially if you can get them cheaper, but I just chose JP Morgan. It's among the best in this group. JPM is that ticker. Intuitive Surgical, take a look, ISRG, it's on sale. And Edwards Life Sciences, EW, these are growth stocks here, but they are on sale. That's our whole point of this episode. We found some value and then some growth on sale. So continue to keep your wish list, maybe take some nibbles out there, but understand that it's going to continue to be volatile here for probably quite some time here as we move forward, but we're all in this together. So you don't want to miss a single episode. Get all of the Value Investor podcasts because I'll be bringing you more content from my dining room here in Chicago. But you can get us a lot of places now. We're on Spotify. We're on Apple Podcasts. You can get it with the Market Edge, which is also being broadcast here from my dining room. on SoundCloud. So get 2 shows for 1 on SoundCloud, but be sure to get us somewhere. And I will be back next week with some more value stocks.
This material is being provided for informational purposes only, and nothing herein constitutes investment, legal, accounting, or tax advice, or a recommendation to buy, sell, or hold a security. Do not act or rely upon the information and advice given in this podcast without seeking the services of competent and professional legal, tax, or accounting counsel. Publication and distribution of this podcast is not intended to create, and the information contained herein does not constitute an attorney-client relationship. No recommendation or advice is being given as to whether any investment or strategy is suitable for a particular investor. It should not be assumed that any investments in securities, companies, sectors, or markets identified and described were or will be profitable. All information is current as of the date herein and is subject to change without notice. Any views or opinions expressed may not reflect those of Zacks Investment Research as a whole.